Hey, this is Michael with Turley Team. Today I'm going to run through a brief explanation of the Home is Possible Down Payment Assistance Program, which has two main options as well as an option for teachers. Here are the features for the first-time homebuyers. Down payment assistance up to 4% of the total loan amount, which is usable for the down payment and closing cost. It's forgivable after 7 years if you stay in the home. This means that as long as you stay in the home and make your payments, you won't even pay them back for the money that they lent you for the down payment through the second mortgage. It's also got an attractive 30-year fixed interest rate, and it's a statewide program. Here are the requirements. Must be a first-time homebuyer, which means you have not purchased a home in the last 3 years. The max purchase price here in Clark County is $504,081. And if you have a 680 plus credit score, the maximum debt ratio for Home is Possible is 50%, meaning 50% of your gross income can go towards your monthly debt or liability payments. Remember, this is based on your monthly payments on things like credit cards, car payments, and student loans, as well as your new mortgage. If your score is less than 680, you can have a 45% debt to income ratio. Other requirements you should know is you must live in the home as a primary resident, you must meet standard underwriting requirements, and you must complete the home buyer education course. Next, let's look at the non-first-time homebuyers. The requirements for non-first-time homebuyers are as follows. You need qualifying income below $140,000 a year, home price below $766,550, and a minimum credit score of 640 or 680 for manufactured homes. The maximum debt ratio for government loans, which are FHA and VA, is 50% if your credit score is 680 or higher, or 45% if it's less than 680. 45% for manufactured homes as well, and for conventional loans, it's 50% with a 640 credit score. You may own one other property outside of the state of Nevada at the time of your closing, and you need to also complete a homebuyer's education course. You must meet standard underwriting requirements for this as well, and you must live in the home as a primary resident. If you're wondering what's the catch, the only real downside is rates are a little bit higher. If you aren't a first-time home buyer, you'll probably be between 0.5 and 0.75% higher than the average market rate. If you are a first-time home buyer, which in this instance just means you haven't bought a home in the last 3 years, you may actually get an even better rate than a standard FHA loan. If you don't think you qualify because your income is too high or your credit is too low, don't worry. We also have other options with no income limit and a lower credit score requirement. So just let me know if that works better for you. If you want to have any other questions that I can go over with you or hear about the teachers program, give me a call or text me at 702-523-6566 or email me at mturleyplgnv.com. And that's mturley at plgnv.com. Thanks.